Rout. Good morning, all you magnificent melon heads. A frozen weekend is finally behind us. A new week is upon us, and all the wonderful hopes and potential that comes along with that. Today is January 22nd, 2024. Top story this morning, the stock market sell-off in China continues. This one's been going on kind of quiet, kind of under the radar. There's been some mention of it in the mainstream press, but not the attention it deserves. The stock market in China and in Hong Kong just continues to shed 1% a day over and over again. Yesterday, the Hang Seng, the SSE, the Shanghai Stock Exchange, both down between 1% and 3%, depending on which index you're looking at. Stocks in Hong Kong, notably, are now selling at a big discount to what they sell for in mainland China because, well, it's the same company, the same shares, but listed in Hong Kong. You have a little bit more foreign financial influence there. Foreign firms can sell a lot easier, whereas in mainland China, you sell too much stock, you get a visit from people you don't want to visit from. And, well, you've got this huge gap has opened up between the value of the same company in Hong Kong versus in Shanghai. And I'm sure that's a totally natural, organic function of a free and open, fair, independent market. And it certainly has nothing to do with these government bureaucrats and these CCP hacks putting their fingers on the scales to try to prevent the stock market from crashing. Newsflash, it's not working. Things just keep getting worse and worse in China. Then today, we've got word that all of these Chinese government cabinet officials are saying, oh, we're going to take all kinds of steps to try to prop up the stock market. They're intervening in Forex markets to try to stop the decline of the Yuan. Oh, and they also said AI. They're like, well, crap, let's throw that shit against the wall. Seems to be working in America. Artificial intelligence, stock market crash over. Well, see if that one works. Good luck with that one, China. Well, like I said, it worked here in the States, so maybe it'll work over there. Meanwhile, U.S. companies, they're getting in on the action, taking out a record amount of debt in the first few weeks and days of 2024. Over $150 billion, and this is just the big companies here in the States, have reached into the bond market, pulled out billions. And, well, there's some conflicting messaging going on there because the article mentions you've got companies that are looking to lock in lower interest rates. And then in the same sentence, they're saying investors are trying to front run the Federal Reserve and the rate cuts. Well, which one is it, guys? Are interest rates heading lower or are they heading higher? If interest rates were heading higher, well, then you would want to lock in your lower interest rates. You would want to take out the debt now. But if interest rates were heading lower, why would you want to lock in these rates? So there's a little bit of conflicting messaging here. And I would just remind you guys, the Fed only controls the short end of the yield curve. They only control that overnight rate. You know, when companies reach into the bond market, when they're borrowing there, that's more like the 10-year, that's what those rates are based on, the spread between the 10 and corporate debt. So the Fed, they can influence it, but they don't directly control it. And I'm not so sure just because the Fed lowers on the short end, the 10-year may not do what you think it's going to do. What else we got going on this morning? Boeing is back in the news. The FAA is saying we want you to expand the population of the jets that you're inspecting for that issue with the door plugs. Remember that plane where a panel just blew out mid-flight? Well, they've extended that from the 737 MAX 9 to now the 737-900ER, which is a similar but slightly older model. So they're adding to the population. Boeing stock is down this morning on that news. We have also got Archer Daniels Midland, a big ag company. They have put their CFO on administrative leave pending an investigation. That's never a good sign. That stock is down big this morning. Not sure what's going on there, but possibly a decline in the plant-based protein market. They may have tried to hide that up with some creative accounting, maybe. Creative accounting never really goes over so well. Anyways, that one is making headlines this morning. UK businesses are on the brink. There's some scary stats coming out of the UK. All kinds of pandemonium, dogs and cats living together. Why don't we shrink my big melon of a head and see what is going on in the markets this morning? Guys, don't forget that like button. It really helps with the YouTube algorithm. And if you're new here, hit that subscribe button. We do this every business day. Have your coffee with the melon heads. The Fear Greed Index right now is heading back towards extreme greed territory, currently at 72. We were pushing 80 a couple of weeks ago. We came back down into greed territory with that little bit of a sell-off that we got to start the year. Now here we are back at all-time highs, heading back towards extreme greed. S&P is set to open 13 points higher, or about 0.25%, which would be yet another ATH for the S&P. Stocks just keep going up. The Dow is set to open 100 points higher, also 0.25% in the green ahead of the opening bell this morning. And the NASDAQ still positive, but something's up with the NASDAQ right now. It peaked about an hour ago, and it has been falling ever since, still well into positive territory, up 71 points at the moment, but it's been giving back a lot of those gains. And we've got the DXY. That is down this morning about 12 basis points at 103.17. The Chinese are defending the yuan by selling dollars right now. That the yuan is not a direct input into the DXY math. It's more the euro, the British pound, the Japanese yen are the big inputs there. But the Chinese selling the dollar to prop up the yuan will have secondary effects. It will send the Dixie lower indirectly. So that's having an effect on the strength of the dollar this morning. Looking over at the bond market, we've got the long end of the yield curve is lower. The high end is higher. We have got further inversion in the yield curve this morning. The 30-year Treasury is at 4.295. That's down almost 6 basis points. The 10-year, 4.090. That's down almost 6 basis points. 2-year is actually making a smaller move for once. The 2 has been making the bigger moves lately. Not today. The 2 years at 4.378. That's down only 3 basis points. And the 1 month is actually up a half a point at 5.39. Looking over at the commodities board, we've got February gold futures are down about $5 this morning, $2,023.95 for gold. That's down 0.25%. March silver futures at 22.07. Silver's had a rough couple of weeks here, down 65 cents this morning, or almost 3% lower. Platinum is essentially unchanged here. April platinum futures at $906. March palladium futures 927. That's down about 2.25% this morning. And West Texas Intermediate crude oil, March futures, 73.57. That's up about 32 cents, or about 0.5% higher. Now, let's take a look at this story here this morning, guys. Hong Kong stocks at 36% discount show the true depth of China gloom. And I would add, not only does that big discount show the true depths of China's gloom, but it also shows the true depths of China's bureaucratic BS. That the same company could be trading for a 36% discount in a free-ish market. I don't want to say free market. Hong Kong's pretty far from that, but it's certainly better than the mess in Shanghai. 36% discount. Same company, same stock, 36% cheaper depending on where you buy it. Seems like a totally organic price discovery kind of thing to me. The deeper Hong Kong sell-off shows global pessimism about China. Disappointing growth recovery and measured stimulus sour the mood. A rout in Chinese stocks listed in Hong Kong intensified Monday, pushing their discount to mainland peers to its deepest in 15 years in the latest sign of growing pessimism among international investors. The Hang Seng China Enterprise Index fell 2.4%, inching closer to a level seen almost 2 decades ago, while the onshore benchmark CSI 300 index finished 1.6% lower. As a result, a gauge tracking mainland stock prices versus their dual listings in Hong Kong reached the widest since 2009, implying a 36% discount for the offshore market. Incredible. Same company, just 2 different places, a 36% discount. That's what you might call a dislocation in markets. I think that's the word some might use, a little bit of a dislocation. The steeper losses in Hong Kong were some of China's most influential and innovative firms. They're listed in Beijing's interference is less felt in Hong Kong. That paints a more worrisome picture of global investor sentiment towards the world's number 2 economy. Signs of government intervention to prop up the mainland market have increased in recent weeks. The selling pressure continued despite a more optimistic Wall Street, where the S&P 500 index climbed to a record on Friday. So it's also interesting, guys. World's second largest economy is just absolutely in free fall right now. World's largest economy, at least the stock market, at all-time highs, and looks like going all-time higher. One of these things not like the other. It's supposed to be this same intertwined global economy. One of these things doesn't make sense here. Well, look, take a look at the Hang Seng here, guys. This is the stock index in Hong Kong going back about a year. Just brutal year. Remember last January, we were supposed to have the China reopening? What happened there? Well, not so much. It's just done nothing but go down for the better part of a year. And just look here since the start of this year. Where's the beginning of January? Here's the last trading day of last year. And then here's what we've got to start the year so far. And clearly you can see this thing is steepening down 2.25% today. That's the Hang Seng. Now here's the Shanghai Composite, or the SSE. Again, doing about the same thing, going all the way back to about January. It was humming along, trading sideways for the better part of the spring last year. I moved the chart. We did sell off a little bit into the end of the year. But then again here, check out the beginning of the year. We had 1 or 2 up days, and then down we go. And now that sell-off is just accelerating down over 2.5% just yesterday. And we've got the regulators are just clamoring here. China will take more forceful, effective steps to stabilize market confidence, the cabinet says. Very little detail on what these more forceful and effective steps will be. They're just trying to jawbone markets higher. China's cabinet said on Monday it will take a more forceful and effective measures to stabilize market confidence, state TV said, citing a meeting chaired by Premier Li Qiang. The cabinet also said it will step up medium and long-term fund injections in the capital markets to strengthen market stability as well as promote healthy development of the market. It said it would accelerate upgrades of artificial intelligence in key industries. You got to love that. They're just like, oh my God, they keep selling stocks. We already made it illegal. We told them they can't short stocks. What do we do? They're like, I don't know. Shit, just get up there and somebody say AI quick. Somebody just go on TV and spout off artificial intelligence and see if that'll make them buy stocks. We've gotten to that point. Okay, good luck with that, guys. Again, it worked here in the States. All-time highs, NVIDIA number go up. Don't think it's going to work in China, though. We'll see. Also going on this morning, China banks move to stabilize the yuan as stock markets slide. China's state banks actively sold dollars in the Forex market on Monday to stop the currency from suffering a rapid decline after markets in Shanghai and Hong Kong fell over 2%. Looking right here, this is the chart of the yuan versus the U.S. dollar. This is going back to about the beginning of last year. Now, remember, we had that ripping strong dollar all last year as interest rates were rising and the DXY just kept getting stronger and stronger. We got near this all-time high. We actually broke out just above it. And then, of course, the end of October, right around Halloween, we had that massive drop in the U.S. 10-year yield. The dollar weakened along with that. And then we came back down here. Now, you can see since the start of the year, however, that has reversed upward. And the dollar has been strengthening against the yuan ever since the beginning of the year. So it looks like right now China is looking to hold the line right around this 7.2 to the dollar. That's 7.2 yuan to the U.S. dollar level. That seems to be the line in the sand that they're drawing here with the all-time high around 7.3. Also going on, U.S. companies rush to bond market in record $150 billion debt splurge. Investment-grade companies tap dollar-denominated debt market at the fastest year-to-date pace to lock in lower yields. U.S. corporate bond markets are on fire as companies have sold a record $150 billion of debt since the start of this month, the busiest opening to the year for more than 3 decades. Investment-grade groups have issued $153 billion worth of bonds this month. That's according to data from the London Stock Exchange Group, the highest year-to-date figure for dollar-denominated debt in records going all the way back to 1990. And then this is the sentence that had me scratching my head. Somebody help me make sense of this. Let me know in the comments if this makes sense to you. Borrowers are rushing to lock in lower interest costs while investors are keen to buy new bonds before policymakers start cutting U.S. interest rates later this year. All right, somebody help me out with this. The companies are borrowing because they're saying we want to lock in interest costs, which means the borrowers are telling us they think interest rates could go higher from here, right? You don't lock in interest rates if you think they're going lower. You lock in interest rates when you think they're going higher. So that's the first half of the sentence. And then they're saying investors are keen to buy new bonds before policymakers start cutting U.S. interest rates later this year. So the investors are saying rates are going lower. I mean, they're taking opposite sides of the trade here. So which one is it, guys? Who do we believe? Do we believe the investors who are saying 7 rate cuts in 2024? Or do we believe the companies who are saying we better borrow $153 billion before this thing gets worse? Again, the Fed doesn't control this rate, guys. The Fed only controls the overnight rate. They control, more like when we go through the bond market, closer to the 1 month, the SOFR, the overnight rate. They don't control what the 10-year does, at least not directly. They can buy or sell 10-year treasuries. They can use special purpose vehicles. They can do QE and QT. I get all that. But as far as directly controlling the 10-year yield, no, they have influence over it, but they don't directly control it, at least not yet. We don't have full-blown yield curve control. So one of these two halves of this sentence, they're diametrically opposed to each other. And, everybody's just, it seems like the prevailing wisdom in Wall Street is that interest rates are heading lower, and maybe the Fed funds rate is heading lower. But again, guys, those longer-term rates, which are far more important than the overnight rates, I'm not so sure those are heading lower. All right, because if dollars keep getting more scarce, and right now dollars are getting more scarce, the M2 money supply is falling for the first time since the 1930s, although the market hasn't felt that yet because the reverse repo has been dropping, offsetting that decline in the money supply. When that reality finally does set in, long-term interest rates could explode higher. We could end up in a dollar shortage where people start outbidding each other for the little cash that's available. So I'm not really sure which direction that moves when this smoke settles from this one. And this statement right here just really perfectly illustrates the disconnect that is going on in the debt market right now. And just to give you guys a little bit of an idea how big it is, this is the first half of January through January 18th borrowing for every January going back to 1990. All right, now you can see this trend almost always rises, right? There's some ups and downs. Clearly a trend higher. The debt pile only ever grows. God forbid it ever gets smaller, right? No, the debt pile only ever grows. But a huge difference. I mean, look at the spike here, 153 billion versus something closer to about 110, 115 last year. So companies are lining up to borrow money. What are they doing with it? Are they maintaining cash burning operations? Are they buying back stock? I'm curious to know what they're doing with all this cash. Moving across the pond, we talked about China. We talked about the U.S. What's going on over in Europe? More than 47,000 UK businesses on the brink of collapse, warns insolvency experts. 25% jump in firms facing critical financial distress, with property and construction sectors featuring heavily, says Begbie's trainer. More than 47,000 UK companies are on the brink of collapse after a 25% jump in the number of businesses facing critical financial distress in the final 3 months of 2023, according to a report. It marks the second consecutive quarter-on-quarter period when critical financial distress has risen by a 25%. That's the latest red flag report issued by insolvency specialist Begbie's trainer. The construction and property sectors accounted for 30% of all businesses facing critical financial distress. The quarterly rate of increase is the number of companies facing critical financial distress grew by 32.6% in the construction industry, by 41.3% in health and education, a quarter in real estate and property services, and 24% in support services. 18 of the 22 sectors covered by the report recorded double-digit percentage growth in the number of firms whose finances have reached critical condition. 18 out of 22 sectors, pretty much all of them, double-digit percentage growth in the number of them facing critical financial conditions. There is a big debt problem brewing in the UK, guys. 47,000 businesses on the brink of collapse. Their words, not mine. I know I'm going to get the okay doomer thing here. 47,000 businesses on the brink of insolvency seems a little doomy to me. Sometimes I think a little doom is warranted. This might be one of those cases. But if that's not one of the cases, how about this one over at ADM? That is Archer Daniels Midland. Their stock plunges as it investigates accounting. Accounting investigations, never a good sign. And they missed profit expectations. They didn't just miss profit expectations. They got rid of them. Archer Daniels Midland shares plunged in pre-market trades on Monday as the agribusiness giant said its chief financial officer had been placed under administrative leave amid an investigation into accounting practices in its nutrition segment. ADM shares fell 12% in pre-market action. The stock has fallen 19% over the last year, while the S&P has gained 22%. ADM said CFO Vikram Luthar was put on immediate administrative leave following a Securities and Exchange Commission voluntary request for documents. The Chicago-based company said outside counsel and the board audit committee are looking into accounting practices at its nutrition segment, including inter-segment transactions. It's possible different business segments of the company were billing each other and claiming it as revenue. I'm not sure what's going on there. I'm not an accountant. But certainly Mr. Vikram Luthar here is on administrative leave while they dig into his books. Through the first 9 months of the year, the nutrition segment, which is what he's head of, that accounted for $468 million of the company's $4.67 billion in operating profit. The union produces flavors and colors, specialty ingredients, and nutritional supplements. Doesn't all that sound healthy? This year, it has faced a struggling plant-based protein market. People don't want soy burgers. Newsflash. An explosion at a soybean processing plant that's been impacting production, and a restructuring of the animal nutrition unit. ADM said all forward guidance on that segment was withdrawn as it delays publishing its fourth quarter results and full year 2023 results. Guys, they found something real smelly in the books. They're withdrawing guidance. They're delaying their fourth quarter results. They put their CFO on leave. The SEC is digging around in their books. Nothing good happening at ADM this morning. Right now, the stock is down at 17% ahead of the opening bell, trading at $56.54. That's down $11.65 this morning. Rough day for ADM. And it's a rough day for Boeing also. We've got FAA recommends door plug inspections on another Boeing model after midair Alaska blowout. The Boeing 737-900ER is similar to the 737 MAX 9 involved in the January 5th accident, in which a door plug panel detached from a plane filled with passengers. I just want to mention here that it's this 737 ER. Let's see. They're saying Alaska Airlines and United Airlines inspections of the 737 MAX 9 planes in the wake of the January 5th accident found some aircraft with door plugs that contain bolts that were not tightened to specific torque levels. And it looks like this is at least a minimally invasive thing when they do these inspections. So these bolts came loose. It allowed the plug to blow out of the door. Thankfully, nobody was seriously injured. Everybody made it out okay from that. So they got to take these plugs out. I don't know how many panels they need to take off, but they need to check that they have properly torqued these bolts. So it's not like they need to rip the whole plane apart, but the population is growing. We were talking about this when this first happened. You know, whenever an event like this happens, one of the most important things is they do an extent of condition review. Just how widespread is the problem? They go look in a few other planes. If they find more examples of the problem, then the population grows until they stop finding more examples of the problem. Well, at least for now, they've gone from just the 737 MAX 9. Now they're saying the 737-900ER. Now, I would add, guys, that the 737-900ER, it's an older plane. It's been flying for a lot longer. The 737 MAX 9, those were brand new planes where this door plug came off. So they're now starting to look at some of the older ones that have a little bit better of a track record. So I'm not sure how, it's certainly not good news, but how bad is this news? That's up for debate. Right now, Boeing stock is only down about 0.6% this morning, trading at $213.79, down about $1.40. So not good news for Boeing, but again, it could certainly be much, much worse. And I just want to say thank you very much, Mr. KDM. I appreciate the super chat, sir. Thank you for supporting the channel. He says, but the guy from Citi is the one talking about the business debt, pumping for his benefit. Well, you know, the banks collect nice fees every time they reach into the bond market. You got to pay somebody for the transaction. Look, guys, everybody's just going to go on TV and tell you everything's better because their firms want them to. They want a certain narrative. They need somebody to buy what they're selling. They need retail to pile in so that they can pile out. You just, unfortunately, the interests of the people in the financial press, it is less about informing the public. It is less about getting the facts out there and presenting the news. It is more about maintaining a narrative. And right now, the narrative is strong consumer, soft landing, number go up. So, you know, the guy from Citi is going to go on TV and he's going to say soft landing, strong consumer, number go up. That's the only thing you're going to hear. All right. Now, I get it. I don't really do optimism here. I mean, one day, I promise you guys, I'm going to come on the air and I am going to be so optimistic about the future. And man, I'm going to be wearing shades. The future's so bright. Today is just not that day. There's just too many problems that are too big. The numbers are too big. The interest rates are too high. I cannot be optimistic about this economy. And when you see the stock market completely divorced from the reality of the economy, that is a recipe for disaster in the stock market. I got to call it like I see it. Does that make me a doomer? Okay, I'm a doomer. Call it like I see it every time, guys. So, yeah, I'm not surprised, KDM, that the guy from Citi is going to go on the air and say that. Thank you very much, sir, for the super chat and support of the channel. And thank you, No One to No One, for your super chat, sir. Not saying anything, just being a swell guy. I really appreciate that. I'm looking for, did he mention anything else in the comments? No, just being a swell guy. Well, thank you, no one to no one. I am digging your no one name. Yep, I just got a text from Mish saying no question. He's all over that one. Thank you, Mish. Appreciate that, brother. And thank you, no one, for the super chat and the support of the channel. And my buddy, Jose Orozco, the keeper of the bookies, Corn Nuggets. What's going on, brother? He says, good morning, Jack. When is your Sachs guest appearance live? I don't know when it's going to be live. I did 2 videos with Todd Sachs from Sachs Realty. By the way, fantastic trip over the weekend. I hung out with Travis from Real Estate Mindset, with Melody Wright, and with Todd Sachs from Sachs Realty. We took a trip through D.C. We made a video in front of the Fed building. It was so cold, so cold. My ears are still burning. Todd Sachs was nice enough to put us up. Really, really great guy, great hospitality. His studio is amazing. We filmed videos in there. Probably within the next few days, Jose. I don't know exactly when it's going to be, but you guys should totally check out all those channels if you haven't already. Sachs Realty, Real Estate Mindset, Melody Wright. Fantastic group of folks. Had a great time this weekend. And I will share those videos as soon as they go live, Jose. So thank you for the question, sir, and for the super chat. Appreciate that very much. And thank you, everybody, for having your coffee with the Melon Heads this morning. I hope you guys have an awesome week. Thank you for the super chats, the support of the channel. Thank you to my Patreon supporters for everything you guys do for the channel. Also, hi, Mom. Hi, Dad. I love you guys. Everybody, until next time, live small and dream big.